All right. It looks like we'll let stragglers kind of join here, but just kind of want to open up before we get deeply into this here. In terms of ENS, I think hopefully you'll see kind of through this presentation that there's an awareness in the market that there's a shift in business and where it's going, and you're seeing more and more and more ENS capacity out there to try to help support the admitted market shift out. And so we'll talk through a lot of that today, and then we'll also have some dialogue around some ways that you can adapt as distribution in the market to be able to help your insureds. So the shift's a big piece of it. We're going to go over a bit of why standard markets are structured the way they are, and why that creates a really unique environment in the market we're in today. And then really why ENS is a great fit for solving these problems with the market we're in today and the conditions we're in today. And finally, we'll talk a little bit about the adaptation, the tools, the mindset, and all that jazz. I'll end with a bit of Q&A. I'm gonna pull everybody obviously off mute, and we'll have some Q&A there. So let's get started a little bit, and as we go through, if there's any questions, couple things. Number one, I think the chat is functional. If for any reason anybody's having any challenges, what I'll tell you to do is just email any questions to me. Happy to support that, and I'll drop my email in at the end. Oh, perfect. We got folks letting me know chat's functional, so that's perfect. Okay, so first of all, let's talk about what's happening in the excess and surplus lines market today. I think this is a very important starting point for us. I think when you look at really just all the data points that exist in excess and surplus lines, it points to one fact. It represents a chunk of all P&C premiums, 20% of all P&C premiums. It's a pretty big shift. When you think about where the market is shifting from and to, we're surged to over $100 billion in ENS premiums in 23. That's a massive double-digit growth rate, and it's the fifth year in a row that's happened. So for anybody that thinks the market is, kind of cyclical like it used to be, where it's hardening, softening, and there are these 3 to 5 year cycles, we're seeing a pretty consistent, massive double-digit growth rate, which is really important to keep in mind, because at the end of the day, you are tasked as distribution in market, as brokers, agents, producers. You're tasked with getting a solution for your insured. And capacity in the market, admitted versus non-admitted in the E&S space, is going to dictate really your success in being able to take care of your clients. So with this big shift, what you're seeing is a pretty big chunk of the time in all of your firms, you're seeing a need to go on the E&S side of the house to be able to help fulfill the needs of your clients. So we can't ignore the shift. It's happening. All the data points to that. There's logical reasons that this is happening. So if you start thinking about why the shift is here and why we're reshaping the landscape, what's really simple, right? Climate risk is a huge factor in terms of admitted market actions. And so when you look at most admitted markets, now get outside of the small regional players for a second and think about all the major nationals that have a lot of market share. All of them are structured around predictive modeling. And so when you see national admitted carriers making adjustments, well, they're not making it in a zip code, right? Then they're making it across the portfolio. When you see rate action, they're taking the cat load and they're spreading it across the country. So California, New York, Texas, Florida, all the states that maybe drive the pain, what you're starting to really get into today is you're seeing that load being spread nationally across all states. When that happens, that drives up premiums. They're hoping to correct, some of the action. They're hoping to get rate. more broadly across their portfolio to make up for some of the gaps in the states where they're experiencing pain. But then that's also what leads to real non-renewal action in the market. Because if you think about what's happening there, is once they realize that they can't get enough rate, or the growth of the premium and the rates going up don't make up for the losses, then they have to start taking book action. And you're seeing that book action across classes. It's pretty common to have a pretty broad swatch of customers just wiped out because they're non-renewing a segment. Property, you're seeing a big shift in how they view property, and that's creating non-renewals. That's creating tighter underwriting boxes, which we'll talk about that a little bit more here in a bit. And so climate risk is a big factor in a lot of the action that's happening, a lot of the business that's being pushed out. And it's really due to that really, really overgeneralized predictive modeling that is the output of the carriers to take the action. And then you step into some really interesting dynamics that have come into the insurance industry. You look at growing cyber risk that's out there. I mean, it's arguably, when you look at the data, it's a little bit of a false positive. It wasn't widely or mandatory to report pre a certain time. And so actually the uptick in data is a little bit of a combination. Like, number one, is it more broadly happening? Of course, like, we can all acknowledge that we're more interconnected than we've ever been. And there's more ways for hackers and others to kind of get in and do things. That's absolutely true. But the additive to that is it's finally being reported on very consistently. So there's a little bit of a combination of the two things there. But what you're seeing is that's also impacting GL in some cases. That's impacting professional in some cases, and less and less becoming common that all those coverages can be bundled together, on a BOP and things like that. And they're taking major action. So it is a factor in some of the shift. It's just also reshaping how policy output is structured for the insureds and where you have to go to fill that. And so it makes distribution's lives sometimes a little more complicated, right? You got to go to more places to find more things. And then you've got inflation, social inflation that's happening. There's increased litigation. You're seeing a lot of dynamics, especially by state, that's really changing the legal landscape and the output. And then you have regulatory tightening, which you're seeing that. And I'll give you an example. And I think everybody feels this pain to some extent, especially my West Coast folks. California is a tightening market, and it's creating a very interesting vacuum of carriers are either in and dealing with it, or they're exiting the state. And you're seeing a bigger, broader push into E&S in that state overall. And it's driven by catastrophes, driven by wildfire. There's logical reasons why some of these things are happening, but it is creating pain for both insureds and distribution partners. And so, it's pushing more E&S business in states that are really large, because those are the states that tend to have the higher population states, or tend to be the ones where you're seeing some regulatory shift. And then you've got, as I mentioned, the capacity withdrawal, which ties into that regulatory tightening and some of the other performance issues. I think what you see in the middle market is usually kind of a three-step process. Number one, especially in personal lines, small commercial, sometimes you'll see commissions dropping first as a way to try to control the output. The next thing that you'll see is kind of a shift in where carriers are participating from a platform perspective, if they're on raters, if they're not on raters. With agencies and distribution, you'll see carriers shift in managing their distribution. And then the final aspect that they go to kind of last two steps is really like non-renewals, management of the portfolio. And then what you're seeing today is a bit extreme, which is capacity withdrawal. They're pulling out of these states in some cases, or they're shifting their focus or tightening their boxes even more to not play as much. And if you think about that, right, and the bottom line as to why all that is occurring, risks outpace the standard market's ability to respond at scale. Predictive modeling is amazing. Right? It's done a lot of advancement in making things easy, but there's a give and take to that. And risk and the complexity of today's small businesses especially has outpaced that ability to scale. Small businesses are more complex today than they were even 5 years ago. And the way they can operate, what they do, I use manufacturing as an example. You look at that space, and the automation in manufacturing over the past 10 years has changed what a small manufacturer can do. A small manufacturer nowadays isn't 1 million in sales. They're 50 million in sales. And so there's a lot of risk complexity that comes into how that takes shape. But these are all contributing factors. Now, it's not just these. There's so many more things that go into this than this. But these are the keys in terms of what's shifting the industry. It's not rocket science. We've talked a lot of this about why standard markets are struggling a bit to keep up, right? So number one, it starts with appetite narrowing, right? As I mentioned, they're taking action on their portfolios. They're taking action on new business restrictions to really tighten that box. And in today's market, you're threading the needle a lot of times to try to slam something into an admitted carrier. Doesn't mean they're bad. It doesn't mean it's wrong. It's what they're designed for in many cases. That they're designed to be, assembly lines where they're getting through low complexity, high quantity of stuff, and so it's sensible. But it does create pain in the market. All of that narrowing then takes all those companies that are highly automated, that have a lot of infrastructure, and it creates underwriting delays because now you're sending that over to underwriters, and so you're seeing a slowdown and a bottleneck a bit in some of the admitted marketplace just in terms of how they do business. And all of that is really a result of tightening guidelines, broad rate application. Like it's that's how they're designed to operate. And so the message here, and what I want everybody to take away, right, is, and I used to be guilty of this as an agent many moons ago. If someone came in and the admitted markets didn't fit in my agency, did I tell them, you know what, I'm probably not the fit for you? I did. I was guilty of it, guys. I said no. I let them walk down the street, go to another agency that could help them. And you know what? I lost clients that way, right? It was not a long-term smart strategy. So I had to adapt as an agent because you can't allow that to continue, especially when you're trying to grow and scale as an early producer, or in some of the agents that aren't, your large brokers and such. And so the message here is like, they're declining the admitted marketplace. It doesn't mean they're not insurable, right? Like, many of these risks are still good businesses. They're still good operators, but they're just a fit for the non-admitted marketplace. And so I think when you look at the landscape, the really important takeaway here is you can't have the mentality anymore of saying, no, I can't help you. This is too complicated. I don't know your type of business. I don't have any good markets. And so that's why you're seeing a huge uptick in folks going and seeking capacity providers, aggregators, wholesalers, other specialty outlets. Us at Blitz, that's another place that's designed to try to help folks place these businesses. Because again, doesn't mean they're bad businesses. They're just different. And the insurance world has, in some ways, fallen a little bit behind in keeping up with the complexity of a small business owner. If you look at it by the numbers, and I think this is where it gets really important, and you think about how it impacts you every day. 20% of those premiums, again, they flow through the E&S channel, right? Talking about over 100 billion in written premium as of 2023. Huge growth rates. And then you start looking at the top 5 growing E&S spaces. Well, it's not rocket science, right? It's cat property, it's multi-class and multi-exposure insured, right? Which gets back to most admitted carriers aren't set up for that complexity, right? They don't have the ability to easily apply rate and form and rate and term to be able to get the right output for a complicated small business, right? They're not designed that way because they have to file with the states. That is not a simple process. Or an expensive process. So it's a perfect opportunity to look at E&S as an opportunity to build more customer base and service more folks that are just normal in today's world, in today's economy. Real estate, not shocking, right? It's property, right? The cat exposed property creates the property problem in general in all these portfolios, right? Like, it doesn't just impact one segment. So you'll see non-renewals and things happening in the property, in the real estate market, simply because the property portfolio is not sustainable from cat perspective, and that impacts their view of the whole class. And so it's really just how they're designed, right? I think construction, if you start looking at contractors, it's one of the most common ones that, admitted carriers have been flow in and out of. But what you're seeing today is it's a lot more complexity in contractors than there ever was historically. Cyber and tech, again, huge changing and evolving landscape. Excess casualty, It's there's spaces that it's natural to see why there's a complete dynamic shift in the market in terms of admitted leaving these spaces, and then who rises up to then fill that gap in the insurance industry. It's the E&S providers. We have no choice but to step up and specialize in these spaces, become experts, build amazingly efficient and easy ways to conduct business, which we'll get to that here in just a bit. It's all really important to keep in the context of why we exist. Now it's just becoming the norm instead of the one off, instead of telling your clients to go away. And so you can't ignore the numbers, because what does this mean to you in your office every day at your desk? It actually means a lot, right? Because there aren't that many efficient ways to transact complex E&S or small business E&S today. And that's why Blitz exists. That's why we do what we do. We're trying to make it easier and give you back time in your day to be able to get through the business that is pushing into your agency. You don't have a choice, it's pushing into your agency. And so the biggest thing that you look at is and want to ask yourself is, why E&S, right? Well, it's really simple, guys, right? It's truly insurance fundamentals is why excess and surplus lines is a great fit for a lot more clients, and to help these clients that are being pushed out of the admitted marketplace that are good businesses. It's really simple. We are experts in the excess and surplus line space. We actually have to have the true discipline of understanding the proper rate, understanding proper form application, understanding all of the mechanics that go into it. We know how the soup is made. That orients us really well to solve all of these problems, right? Because we don't need to say no. It's not a blanket no. We can really take a step back and start looking at this and say, how can we say yes? It's a different mentality than the admitted side of the marketplace. Not to knock my admitted friends. I've worked on the admitted side of the house. It's got its place, but that's not what E&S is designed for. And that's why we're so perfect for this moment, right? All of the customization that we can do, all the flexibility that we have, that leads us to being able to be responsive to fill these gaps and solve these problems. Huge moment for us in E&S. What does this mean for distribution? It's really interesting, right? You have to have a dual market strategy now. You can no longer just say, I got my top 5 admitted carriers and I don't really need to go crazy with you. It's not the case. Like, you need an E&S strategy now. You need to know the processes, the workflows, the needs, that everything that's on your desk can be placed. You just now have to go be efficient and effective at planning for that and doing for that. And then you're looking at the underwriting referral side of things. I mean, it's the norm, right? Like, lots of routine accounts are even being referred out due to appetite. And you're seeing a lot of the admitted market underwriters, again, that they don't want the complexity, right? So you're seeing that shift. That's why it's so important to have a process that's quick to move. You got to manage your carrier and wholesaler relationships. You got to be strategic, right? I remember seeing portfolios where some of my partners would have 15 wholesalers that they went to for the same stuff. That to me is like as bad of a strategy as having 100 admitted carriers that you can access for capacity, but you don't even have enough clients to feed 100 admitted carriers. It's the same thought process. You just have to apply it now to the excess and surplus lines side of the house. And you have to be strategic based on your client portfolio, based on your niches, based on what your producers want to go after. All the go-to-market strategy that you have, it's not just an admitted market marketing flyer anymore. Like, you have to understand how to manage your capacity on both sides. And then we get to the aspect, and again, this is the most important. I think this is the most important takeaway that I hope y'all have. Like, how to adapt, right? This isn't rocket science. Insurance has been around for hundreds of years, right? There are constants that dictate how you operate every day that are working just fine, right? You just now have to apply that to a different space. So let's think about what that means. First of all, invest in E&S relationships, right? Invest your time, your energy, your effort. You got to have those same monthly meetings with your E&S partner that you have with your admitted partners. You've got to understand how that relationship is important to you relative to what you're trying to accomplish, and then how to make that a successful relationship and build that strength with those partners. That's huge, right? But this isn't new in insurance, just so you know. Next, educate your clients. For the love of God, clients are used to the admitted marketplace, right? They understand all of that stuff, how it works, what happens, when it happens. They know all of that. E&S is different, right? Your customer may have been with an admitted carrier their whole lives up to this point, but now they're being pushed over to the E&S marketplace. What does that mean, right? You have to be able to understand how to explain what excess and surplus lines is. You have to be able to understand why excess and surplus lines isn't bad, right? Like I talk to a lot of distribution partners, and the first thing that I explain is it doesn't mean you're downgraded as an insured, right? Like that's not what's happening here. We're just finding you the right capacity provider to help support your business. And so educating your clients about the process, how long it takes, what you need, what you do, what's different, why it's different, all of those things need to be uh, points of education to your clients. And if you don't do that successfully, your clients may be confused by the shift in how business is transacted, right? And what does that do? Well, it creates lack of confidence sometimes in their agency. It creates confusion. It creates fear. All the things that you don't want your insured to have to go through when they buy insurance. Digitizing your workflows. This digitized work is in E&S. I know everybody's shaking their head and saying, where? So first of all, Blitz insurance, why we exist, right? We digitized the E&S environment, right? A whole ecosystem, right? From a quoting, we don't take applications. We have automation all across every point of ecosystem of the life cycle of your insurance. It's possible, right? Number one, be demanding of it, right? Partner with people that do it. There's no reason that you don't have a choice of who you work with and how they operate and whether that does or doesn't fit, right? You absolutely need to prioritize understanding that. And then secondly, understand the processes in the first place of what happens in E&S and use your internal software that God knows, as distribution, we have 15 pieces of software that we have to use every day. We don't have a choice, right? It's all in different systems, all in different platforms, all in different things. You need to figure out how to make that digitized to the extent that you can to create efficiency. If you're not efficient, small commercial E&S premiums, you're not going to make revenue. You're not going to make money. It's very difficult. Your life will be miserable as an account manager, as a CSR, as anybody that has to deal with a non-digitized workflow, right? And so it's really important to take a step back and say, who do I work with? And is this box checked, right? Is it really functioning in a way that's efficient and effective for my agency? If the answer is no, you may not have the right partners, right? It goes back into invest in ES relationships. Are you investing in the right relationships, right? That's the question that you have to ask yourself every day when you're transacting in the excess and surplus lines world. Partners are out there to do it. Blitz Insurance is here for this exact reason. We're making your lives as easy as we humanly can. We're giving you efficiency. We're giving you your time back. And most importantly, we're giving you control over the ENS journey. It's pivotal. Then track appetite shifts. Sometimes things happen to us, right? And when they happen to us, sadly, we don't pay attention to it and we don't note it and we don't create a strategy. The only way to create a true ENS strategy is understand the appetite shifts of your partners in the admitted space and then pivot that over to an actual strategy that lands in the ENS. It's the most important aspect of any of these things. ENS is no longer a backup. It's the new frontline, guys. This isn't, it's the trenches. We're all fighting together to help insureds. If you embrace ENS as a core competency, you're going to gain market share. Lots of your competitors, lots of even friends that own agencies, they're not doing this. It's not a core competency. They don't know what it is, how it works, why it works, what partners they should invest time with. They have no strategy. And so if you don't create a core competency, you're not going to grow organically the way you want to grow. And carriers and brokers who partner across markets, you're going to deliver more value faster if you have the right partners. That's the key. In a hardening and really volatile market, flexibility is always going to win, right? Admitted carriers are locked in their box. They have to do what they have to do. Flexibility wins in a hardening and volatile market. Guess who has flexibility? E&S capacity providers, right? We can apply the right rate, the right term, and we can work to understand what that means, right? It's very important to admit first that this isn't something anymore that you can ignore. This isn't something anymore that you can punt off your desk. You have to be able to create that strategy and own your own destiny. If you don't own your own destiny, other agents will. I can tell you that right now. There's you're if you're saying today, I don't have an E&S strategy, I don't want to write E&S business, it's too hard. First of all, you need to take a step back and say, but is that sustainable to say? Second of all, come up with a plan. Third of all, find the right people that can help you. Those are the things that you need to do in today's market environment. Because by the way, it's not going to slow down for a bit, guys. It's showing no signs of slowing. So I'm going to pause here. I know we went over a lot. We've got looks like 4 minutes left, so I crammed in a lot of material. I'm going to go to the chat first, and then address some questions. If there's any questions in there, please drop them in there. If there aren't any questions in there, obviously now would be the time to dump those in. Happy to answer anything you got. So first of all, I see a question. Will we receive a copy of the presentation? Yes, no problem at all. We'll get that over to you, recording as well. So super easy. In terms of, let's see what other questions we got here. Oh, I see an amazing question. Micro business clients that can't afford many E&S commercial premiums. I love the question. So first of all, you're thinking of traditional E&S outlets, right? There are E&S outlets today that are situated and oriented to be conducive to small business, true small business too. And so micro clients are just as important, right? You just need an easy way to do it. That's why we exist at Blitz Insurance, to be honest. So would love to chat with anybody that's curious about how we can help you there. What Blitz Insurance does. So I see that question in here. I can get to this quickly. So we are an E&S carrier in the market, right? We control our own product, our own underwriting, our own claims, everything. We're an MGU on paper, but we're a capacity provider. We specialize in small business. We write general liability. We write package. We write all the Main Street industry groups that you can think of. So think contractors, lessors risk, retail and services. We've very robust appetite, builders risk, special events. Happy to fill anybody in for through this. How do we get an appointment with Blitz? That's a great question. I can actually send a link out to the group. Happy to set up time, get you on board with Blitz and all of that. So great question. Very easy process, by the way. So in terms of other question, excess and umbrella markets, I see that one. It's a great question. So that's one of the tighter marketplaces, right? So if you were to look at excess and umbrella markets, you look at liquor liability is another one that's pretty common in terms of a line of business is becoming a little bit tighter. There's lots of capacity providers out there, right? But I think thinking of it in terms of with one lens of saying, is there a monoline option? There's also probably a lot of folks that can do it on package. And I will tell you, at Blitz Insurance, we're working really hard to increase our product breadth and our coverage breadth. And that is on our very short list to be able to add very shortly to be able to actually do the GL, the package, and excess and umbrella. So would love to talk more with you about that. In terms of towing risks, for us, we don't write those at Blitz Insurance today. But again, our appetite is evolving immensely. So happy to talk more about that for anybody that has any additional questions. So I see another question in here, and I'm going to make this the last question I answer in here, and then everybody else I'm going to try to email afterwards with the plethora of questions that we have. But can you comment on the requirement of if an account is eligible for admitted market, but maybe hindered by price or even coverage options? So you're talking about compliance, right? And I love this because this is the point of education that a lot of agents have to jump into now that they're having to balance this. There are state-specific requirements that have to be met in terms of diligence. It varies by state. So some states have opened it completely up and said admitted, non-admitted, do the right thing by the client. other states require a certain amount of declinations, reasons, a form needs completed. And so that's one of those education points where you have to understand the process to be able to deliver on exactly what you need by state. Um, so other questions in here, I'm going to hit everybody up individually. I'm going to give you guys my email address. Please feel free to email me directly. I'll say it, but I'll also drop it in the chat. It is tim@blitzinsurance.com. Tim, at blitzinsurance.com. Please don't hesitate to email me. Would love to talk more about what Blitz does in the market, why I think we're incredibly unique at a time where you don't have a choice but to leverage E&S. We've created more ease and efficiency than anything I've seen in my years in the insurance industry. So I'd be happy to talk to folks about that, explain more around what Blitz does, get you on board if you're not, or if you're working through a partner that's super exciting, we can help support you in that regard.